been working with taxes for many, many years, and I still find the same traits with a lot of people I talk to. They become panicking around the term taxes. Hi, I'm Vin Shembri, president of WOWzer Technologies, and today I want to talk about taxes, just generally. Here's what I find. I find that most people don't know or care to know how it actually works. And that's okay. And I'm not going to sit here and give you the definitions through the Tax Act or give you a big long lecture about taxes and so on. I'm just going to touch on a few points. First one is you should care, because it's your money. Okay? When I say they don't really actually know how it works, they really don't. And to them, it's a very complicated issue. In most cases, especially if you're an employee, it's a very simple situation. This is how it works. You make money, they take deductions from you, and at tax time, all it is basically a reconciliation. What's that? That simply means that, this is how much you paid, and according to our Income Tax Act, this is how much you should have paid. So if the amount you paid is greater than what you should have paid, you get a refund. You get a refund. If the amount you paid was less than what you should have paid, you owe money. Because here's one of the other things that I hear a lot about. Well, do I get money back? Right? It's called the refund. You don't get money back. That, in most cases anyways, what that means is that you get a refund because you overpaid. I don't know when you started work, if you remember these forms, they call them TD1s. When you go to work anywhere, they get you to fill out these forms and there's numbers on them. Well, what happens is on those forms, there's one federal and one provincial. What happens is that you estimate the type of deductions you can have prior to filing your tax return. Because your tax return has all the possibilities. These forms have their general possibilities. Like what, you say, Vince? For example, have some kind of medical condition. That allows you to put that on that TD1 so less taxes is deducted from you. And therefore, you have more money every single paycheck as opposed to having a big refund at the end. Remember, refund. And I also said in most cases, right, a refund comes because you've overpaid. Well, what do I mean by most cases and not all cases? In some cases, if you are what CRA or our taxing authorities deem you as a low income earner, you'll actually get a refund without having to contribute. But I wouldn't advise that. The idea is to pay taxes. I recommend that you do. You say, Vince, you want us to pay taxes? I only want you to pay your fair share and not a penny more. Because Because the government has deemed what? They will allow you these deductions and credits, which I'll talk about in a minute, right? That helps the other areas of the economy, and that's why you receive them. Okay? And the other thing is, I get this question asked a lot. Is everything income? Is it taxable? The answer is yes. All income is taxable. There are exceptions to things as well. And it's not necessarily the income. And that's where I'm going to go to the next one, and that's deductions and credits. Credits, okay? Credits is you're getting some kind of a credit. Think of a credit, right? It's not necessarily an amount. In another term that on our tax returns that is used is called a non-refundable tax credit. That means you can use it as much as you possibly can, and it's non-refundable. You don't get any money from it. It just lowers how much taxes you've paid. So this puts you in a position maybe to get a refund. A deduction, on the other hand, means, if you think of employee versus a contractor, right? Most employees can't deduct anything. I said most, but if you're in sales, right, you may have expenses that you incur in the performance of your duties, right, that you can write off against your income. This is also true for contractors. I'll give you some examples, okay? So for example, as an employee, especially during the season of having to stay home, right? You have home expenses where you're actually working from home, not in an office, and therefore you're generating income, revenue, whatever it may be, so you can write a portion of that. As a contractor, especially a salesperson, if you work from home, you have a home office. You can write a percentage of that as well. As a contractor, okay, you're deemed to generate revenue from multiple sources. I'm one of those individuals. Therefore, I can write off my expenses. Like what? My cell phone, my phone. I use it to do what? To generate revenue. There's the key. A lot of people say, Vince, what can I write off? What you can write off is anything with the intent to generate revenue. What does that look like? Let's say that, we meet up and we go to a coffee shop and we sit down, right? And our whole purpose to be there is for us to figure out if I will be providing a service to you, taxation or accounting or bookkeeping or any of that nature. And you know what? I pick up the tab for the items that we're going to have, whether it's a drink, maybe some kind of a minor food item, right? I pick the whole thing up and we have our discussion. Now, when we go away, right, I find out later that you do not wish to work with me, which I'm fine with. Now, the real question is, that bill, can I write it off? The bill of the drinks and the items that I bought? The answer is yes. Why? Because we were there with the intent to generate, I was there with the intent to generate revenue. So therefore, that becomes a deduction to my income. Does that make sense? That's really all it is. That's really all it is. Right? How do you tell whether you're an employee versus a contractor? Well, ask yourself this question, right? Or these questions. Do you work from 9 to 5, 5 days a week, 40 hours a week? Is that an employee or contractor? Before this period of time, this pandemic time, when you were going to an office, right? Was it your office, home office, or was it the company's office and you had to go there in order to perform your duties? Sounds like an employee to me, right? Both of those instances, right? Do you have to drive to visit your customers, clients? If you don't have to drive, you're an employee. But if you have to drive, all right, guess what? It's a deduction, and that can also be a deduction as an employee. A salesperson uses his car to do that as well. So you see what's going on here? Do you have multiple streams of revenue? What does that mean? In other words, I've got 20 clients. As an employee, guess what? All the clients belong to the employer and not you, so therefore you're an employee. You see the differences? They're really not that difficult. So it comes down to what? Knowing that, all income is taxable, and you may have credits and deductions based on what it is that you do. Okay? And a refund, or when you say, I get money back, you're not really getting money back in most cases. You've paid more than you should have. And you can correct that. You can actually at any time go back and refill out your TD1 and give it to your person in HR. And if you owe money consistently every year, you can actually on that form ask to have more money taken out. I, for one, I've seen many of my clients, right, are really excited when they get money back because they've learned a very important principle. They've learned to live off what it is that they get net on a regular basis, which actually is what financial advisors try to tell you, is to learn to live off, your minimum requirements. So by actually overpaying, if you want to call it that, you actually get some money back. What I would suggest is when you do get your refund, put some of it away. Don't spend it all. Don't go crazy. It all. Don't go crazy, okay? So, in summarizing, the reason that people get anxious around tax time is because they don't really know how it works. And it's really quite simple. Income minus deductions and expenses tells you how much you owe, and then you look at how much you've paid, and the difference is either a refund or you owe money. It's really that simple, okay? All income is taxable. All right? And in most cases, a refund means you've overpaid, which I've said. And deduction versus credits, those are allowed. So I hope this has helped you. If you have any questions, please reach out to me. We at WOWzer Technologies, we're people focused and AI driven. Have a wonderful day.